Alright, so we're live on YouTube as well now. Let's start with the first video here.
The next couple of videos is going to be about using order flow for a confirmation. Now this video is going to be a short introduction into this part of the video course. So let me first tell you what I mean by saying that I use the order flow as a confirmation. The order flow confirms that the big guys want to trade your support and resistance level. The support and resistance level which you found, then the order flow can identify if the big guys who move and manipulate the market are also interested in that level. So that's the first meaning. And also, the order flow improves your trade entries. So it helps you decide if to take a trade and when exactly to take the trade, exactly at what price level to take the trade. All right, so that's what the confirmation means. It means spotting the big guys, and also it improves your trade entries. Now, those are three main reasons why to use the order flow as a confirmation. First reason, support and resistance zones can fail. So if you find a support or resistance zone, for example, by using price action or a volume profile, then you can watch the order flow and actually look for the big guys to appear, to show up around that support and resistance zone. If they don't, they are most likely not interested in trading that zone, and it's usually best idea to skip such a trade. All right, so if the big guys won't show up, the order flow will warn you that the big guys are just not there and it's more risky to enter the trade. So support and resistance zones can fail, and the order flow can warn you and give you sort of heads up that maybe it's not the best idea to enter in the trade. Now, the next reason why to use the order flow as a confirmation is that support and resistance zones, those are not exact levels. Support and resistance is a zone. So for intraday trading, it could be like 5 or 10 pick zone in which you expect a reaction, right? So it is a zone, and the order flow improves entry. It tells you where exactly in that zone you want to enter your trade. And also, I'm sure that this happened to you many times. Price can turn few ticks before it reaches this support zone. So imagine there is, for example, a resistance zone in here, 10 pip resistance zone, and you want to go short from there. Now the price is moving close to it and then just turns and makes the reaction without you entering the trade. But if you are using the order flow, you can use that in your advantage and spot the big players jumping in, turning the price, and this way you have way bigger chance that you won't miss the trade entry. All right, so those are the three main reasons why to use the order flow as a confirmation. Now here is how to do it, how to work with the confirmation. First thing you want to do is find a support or a resistance zone, and in that zone you want to wait for the confirmation. You want the support and resistance zone confirmed. Now this is how you can find the support and the resistance zones. You can use volume profile, you can use the setups which I'm going to show you later in this video course. Those main three setups which I use are volume accumulation setup, trend setup, rejection setup, and there's also the volume up-down setup, which is also a cool setup to use with the volume profile. So you can find support and resistance zones using volume profile. This is actually what I prefer. You can also use support and resistance zones using order flow. I also prefer that. You can use the setups which I already showed you to identify those zones. So you can use the volume clusters, multiple nodes, trades filter, or the imbalances to find those support and resistance zones. And around those support and resistance zones, you'll be waiting for the confirmation. All right. Now you can also use some price action setups which you like to trade, or view up setups, or some other trading setups which you like to trade. So you just find support and resistance zone using one of those methods.
You guys can't hear. That's amazing. That's not good. No, you can hear me. You can't hear the video. Yeah, it wasn't turned on. Perfect. Let's start over. Bummer. Yeah, YouTube would have worked. Zoom is not working. It would have been nice to to know that sooner, but we'll just start over. Trader Dale's in chipmunk mode, so he's talking really fast, but yeah, let's start over.
Hello. The next couple of videos is going to be about using order flow for a confirmation. Now this video is going to be a short introduction into this part of the video course. So let me first tell you what I mean by saying that I use the order flow as a confirmation. The order flow confirms that the...
Just really quick, everybody can hear this through Zoom now, right?
Big guys want to trade your support and resistance level. The support and resistance level which you found, then the order flow can identify if the big guys who move and manipulate the market are also interested in that level. So that's the first meaning. And also, the order flow improves your trade entries. So it helps you decide if to take a trade and when exactly to take the trade, exactly at what price level to take the trade. All right, so that's what the confirmation means. It means spotting the big guys, and also it improves your trade entries. Now, those are three main reasons why to use the order flow as a confirmation. First reason, support and resistance zones can fail. So if you find a support or resistance zone, for example, by using price action or a volume profile, then you can watch the order flow and actually look for the big guys to appear, to show up around that support and resistance zone. If they don't, they are most likely not interested in trading that zone, and it's usually best idea to skip such a trade. All right, so if the big guys won't show up, the order flow will warn you that the big guys are just not there and it's more risky to enter the trade. So support and resistance zones can fail, and the order flow can warn you and give you sort of heads up that maybe it's not best idea to enter in the trade. Now, the next reason why to use the order flow as a confirmation is that support and resistance zones, those are not exact levels. Support and resistance is a zone. So for intraday trading, it could be like 5 or 10 tick zone in which you expect a reaction, right? So it is a zone, and the order flow improves entry. It tells you where exactly in that zone you want to enter your trade. And also, I'm sure that this happened to you many times. Price can turn few ticks before it reaches this support zone. So imagine there is, for example, a resistance zone in here, 10 pip resistance zone, and you want to go short from there. Now the price is moving close to it and then just turns and makes the reaction without you entering the trade. But if you are using the order flow, you can use that in your advantage and spot the big players jumping in, turning the price, and this way you have way bigger chance that you won't miss the trade entry. All right, so those are the three main reasons why to use the order flow as a confirmation. Now here is how to do it, how to work with the confirmation. First thing you want to do is find a support or a resistance zone, and in that zone you want to wait for the confirmation. You want the support and resistance zone confirmed. Now this is how you can find the support and the resistance zones. You can use volume profile, you can use the setups which I'm going to show you later in this video course. Those main three setups which I use are volume accumulation setup, trend setup, rejection setup, and there's also the volume up-down setup, which is also a cool setup to use with the volume profile. So you can find support and resistance zones using volume profile. This is actually what I prefer. You can also use support and resistance zones using order flow. I also prefer that. You can use the setups which I already showed you to identify those zones. So you can use the volume clusters, multiple nodes, trades filter, or the imbalances to find those support and resistance zones. And around those support and resistance zones, you'll be waiting for the confirmation. All right. Now you can also use some price action setups which you like to trade, or view up setups, or some other trading setups which you like to trade. So you just find support and resistance zone using one of those methods, and then in that area you wait for order flow confirmation, which would confirm that this setup is likely to work and that there's likely to be a reaction. Order flow excels in doing that. Honestly, I don't really know any other indicator which would be able to do this, not even nearly as effectively as the order flow. So as I said, the first step is to find a support or resistance zone, and when the price reaches this support and resistance zone, then you want to watch the order flow and wait for a confirmation. When you see the confirmation, then you enter your trade. That's how confirmation works. That's how you do it. All right. Now, those are the confirmations which I'm going to teach you. There are 4 of them. Confirmation using big limit order, confirmation using absorption or spotting absorption. Another confirmation is spotting aggressive buyers or aggressive sellers around your support and resistance level. And also the delta, watching changes in delta. All right, so the next couple of videos is going to be about those confirmations. Hello? The next couple of videos is going to be about...
Whoa. Why is this looping? Oh, it doesn't matter. But anyway, I don't know why it's looping. There shouldn't be any questions so far. That's just an introduction to what we're going to be going over. Again, watching the first video would be really important, or the first class on order flow. We also have for people that don't have access to order flow, I'm live streaming it now 23 hours a day, 6 days a week on my YouTube channel. So You can always go and watch the order flow there.
Hello? This
just as an FYI. So we'll watch this video. It's like almost 30 minutes. It'll be a little bit shorter due to the fact that we're watching it on 1.5 speed. But after this, we'll kind of do like question and answers in case any questions come up for people. And just to be clear, like I could teach this, but I feel like Trader Dale's already done these videos and it's in a good chronological order. And I think it's just easier just to hit play and then to do like question and answers afterwards if any questions do come up. So let's get into the next video. Again, if you have questions, feel free to type them out. And we can always pause the video and answer questions kind of as we go, or we can do like a Q&A session between each video.
trade confirmation, and it is going to be about confirmation using a limit order on the order flow. So imagine there is a resistance zone which you created or found using, for example, volume profile or order flow or price action, doesn't matter. There is a resistance zone in here and you want to go short from there. And you are waiting for a confirmation in that area before you go short. So the price is moving upwards towards your resistance zone. It hits the resistance zone, and in that zone, you want to see a big limit order. Somewhere in that zone, a big limit order, which would tell you that somebody big was waiting there in that resistance zone, and they were waiting until the price reaches this resistance zone, the same as you. But you need somebody big, some big trading institution, right? So when a big limit order appears in here in the resistance zone, you know that some big player knows about this resistance zone and that they are interested in trading it. They just jump in that short trade, and immediately after you see this limit order pop up on the order flow, you go short. You enter your trade. That's the confirmation of the resistance zone, right? The logic behind this is big guys are waiting until the price reaches this resistance zone because they want to enter their trade there. And they are passive. This is important. They are passive, the same as you are, because they are waiting until the price reaches their limit order. And when they jump in, then it confirms the support and resistance zone. In this case, it confirms the resistance zone. And you should also jump in the trade as soon as you see their big limit order. All right, so that's the short trade scenario. Now imagine there is a support. This support could be, for example, based on volume profile or order flow, any way you like, any way you prefer to find support zones. And the price is heading towards the support zone. It hits the support zone, and now you are waiting for the confirmation. You are waiting for a limit order to appear in that zone, somewhere in this area. So as soon as it appears, you enter your trade, you enter your long. If it doesn't appear, well, then you don't trade it because you didn't get the confirmation. All right, so in short trade scenario, you want to see a sell limit in here. This needs to be a sell limit. And for a long trade, you need to see buy limit. This needs to be a buy limit in here. All right, so this is how you use it. This is how you use the limit order as a confirmation. Now, I was talking about this in one of the first videos, and I know that this is a bit tricky stuff. People have problems with this, so I'm going to comment on this again because it's very important, especially with this confirmation strategy. What this is all about is how you identify that the limit order is actually a selling limit order. The tricky part is that selling limit order appears on ask. So in here, this is the ask side. Now the tricky part is that the order flow prints this cell in green color, so it sort of looks like those are buyers. But this is the tricky part, because when somebody uses a limit order, a limit selling order, then it gets printed on the ask. So when you see a big number jump in around support and resistance zone on the ask, like in here, then it's most likely a selling limit order. It's not a big buyer who would want to jump in and push the price even higher with market orders. Because if there is a resistance zone in here, somewhere in this area, then this is most likely pending limit order of some big player who wants to jump in the trade and push the price downwards or enter in a short because they anticipate a sell-off from there. All right, so important thing, sell limit shows on ask in here. A buy limit shows on bid, which is in here. This is big buying limit. Again, you can notice that the sell is red, so it sort of appears like those were aggressive buyers. But again, imagine that this is a strong support, and this huge number, this huge limit order appeared in the support zone. So most likely, you can't be 100% sure, but most likely, this is a buy limit of a big player, a big passive player who was waiting until the price reaches the support and then they entered their buying position. So from that, you should expect a buying reaction. The support got confirmed. This is really important, and I really hope that I made it clear enough. I hope it makes sense. The whole strategy is based on this, so I hope it was clear. Now, what actually is a big limit order? How you can identify it? How big the number needs to be in order to be big, to be considered big? Now, there are 3 basic rules, and the rule number 1 says that the order is bigger than usual order. Now, I know that this doesn't sound too scientific, but this is how I do it. If you look at this picture and imagine that somewhere in here there is a resistance you want to go short from. So you are looking for a big number on the ask side, and suddenly this number appears, 211 contracts on ask. Now, if you look at all those numbers and all those candles which are around, on all those footprints which are around, then you can tell that 211 contracts is quite a lot. Actually, it's the biggest number from all those footprints. So this is how you can tell that it is unusually big number, because it is bigger than usual order, than any usual order in this area. So it's always best to compare with the other footprints in this area. If the number is way above average, then you can consider it a huge limit order placed by a big player. Now, rule number 2. It's got a little bit more tricky here. Every instrument has their usual order volume different. So, for example, 211 contracts on the Australian dollar would be quite a lot, whereas on the S&P 500 futures, on the ES, it wouldn't be nothing unusual. So every instrument has their usual order volume, and that's why I recommend that you start with one instrument and get a feel for it. So, for example, you start with the Euro futures and you only do this with the Euro futures, and you'll get the feel for it. You'll know if there is a 211 contracts jumping in the European session. You'll know that this is a big number, and most likely this is a confirmation. All right, you'll get feel for the numbers. You will know what is above average, what is below average. All right, so that's why I recommend using the order flow and this confirmation method for just one trading pair at first, and then maybe add some more trading instruments, but start with one, all right? Now, rule number 3, different time of day or different sessions have different average order size. So, for example, if this was the 6E, the Euro futures, the European session, 8 a.m. in the morning, this would be a big number. But if this number occurred during the peak, which is the European session and the US session overlap, this is where most of the volumes get traded, then this number wouldn't really be anything that special. So you also need to pay attention to that, whether this number occurs during a calm period of the day, during a calm session, or during the peak, all right? And also during the news, of course, because when there's news, there are huge volumes, all right? So you also need to pay attention to that. Now, if you are starting with this method, with this confirmation method, if it is completely new to you, then just stick to the rule number 1, and it will suffice if you just look around, a few footprints around, and tell whether this number is big compared to the rest, all right? That's how I suggest you start. As you progress, as you get feel for it, you can start applying rule number 2 and rule number 3, but it's pretty much okay to start with the rule number 1.
Really quickly, I just want to add to this. One thing that Trader Dale kind of failed to mention is we also have a completed auction here at the top. 0 versus 212 or so in this instance, it looks like the buyers are gone and there's only sellers showing up. I mean, we have the same here. There was a completed auction here, completed auction here, completed auction here. There's also completed auctions at the bottom. This is it's kind of a weird chart because there's completed auctions all over the place. But when you're watching the S&P 500, or that would be, ES futures, which you can watch to trade SPY, you don't see this many completed auctions. You'll normally see them kind of at the top and at the bottom, and not really in between like you're seeing here. So that's an important thing to watch as well, at least for the S&P 500.
Now here is some additional info before we jump into some examples. I like to look for the confirmation on a 5-minute chart or on a 30-minute chart. Now, important thing is that if you look at 5-minute chart, then the unusually big number, the limit order, is usually smaller than if you are looking on a 30-minute chart, right? So you also need to pay attention to that. I suggest you only stick to one time frame. So let's say that you stick to 5-minute time frame and you only look for those confirmations there, only on 5-minute time frame, all right? Now, another important thing is that the order, the big limit order, doesn't need to appear all at once, because the institutions like to use iceberg orders, which means that, for example, this order, 211, could be entered 5 contracts, then 20 contracts, then 20 contracts, and so on, until they enter 211 contracts. And this could take, for example, 5 minutes. All right, that's the iceberg. So don't be surprised if this big number doesn't appear all at once. It can take some time. All right, so there could, for example, be 50, then after 1 minute, 100, after 3 minutes, 150, and after 4 minutes, 211. All right, so in a lot of cases, it won't appear all at once. Now, I already said this, but it is pretty important, so I'll repeat it. Limit needs to show an important support and resistance zone. So don't just follow 5-minute order flow looking for significant limit orders or significant numbers on bid or on ask. You need to read the bigger context for this. So that's why this is a confirmation strategy, all right? So those limit orders needs to be in significant support or resistance zones. So you want to watch the order flow only around those support and resistance zones. So you don't need to watch the order flow all the time if you just want it for a confirmation, all right? So let's say that this is a resistance zone, the price is getting to the resistance zone. You can have some alert in this area. So the alert gives you a signal, for example, sends you an email or plays some sound. Then you know that the price is heading to the resistance zone. You open the order flow and you are waiting for the confirmation, all right? When you see it, you enter the trade. Now let's make this more clear with some examples. This is Euro futures, 30-minute chart. Imagine that, for example, this area was a resistance zone and the price hit this resistance zone. And in this zone, you are waiting for a confirmation. You are waiting for a limit order. You want to go short because this is a resistance. You want to go short. So you are only looking at the ask side, this side of the footprint. You want to see a big number appear in here. All right, here it is, 242, unusually big number, right at your resistance. So as soon as it appears, you enter your short. Now let's go into another example. This is also Euro futures 30-minute chart. Now imagine there is a support in this area. It could be, for example, those heavy volume nodes in here, this one and this one, created in an uptrend. Now in this...
Yeah, I was going to say this is actually, this is like your cluster chart, which was covered in the first class. If we combined these zones, you would see that you have a abnormally large amount of order flow in this area here. And this is your support. And then you get the full body candles above like this. You come back to that area. You're waiting for your confirmation right there to enter long.
This support zone, you are waiting for some confirmation. And because this is a support and you want to go long, you are waiting for a big number to appear on the bid side of the footprint, this side of the footprint. Now this number appears 187, which is significantly bigger than an average number. And it appears in your support zone, somewhere within this support zone. That's a confirmation that somebody big also wants to trade this. They entered a limit, a pending order to buy, so you also buy and you go long immediately after you see this number jump in. All right. Now another example. There was a strong selling in here, and if you look at this place, there was a heavy volume node. So we can say that this area was a resistance zone, not particularly a strong resistance zone, but let's say that you want to participate in a downtrend and you are waiting for some confirmation in this resistance area. I'm not saying that this is the best resistance area, but for educational purposes, let's say that this is a resistance area which you want to go short from if you see a confirmation, if you see a big selling limit order. So selling limit orders show on the ask side of the footprint, so you're interested only in those numbers. Now this is a huge number, 259. If you compare it to the rest of the numbers in this area, it's definitely way above average. So this is probably some big guy entering a limit order, a sell limit order. As soon as you see that, you press short. All right, that was the confirmation you are waiting for. Now another example, this is a 5-minute chart, so the numbers won't be that big as on the 30-minute chart. Imagine that there was a support somewhere in this area, and you're looking for a confirmation in this area. Because you want to go long, because this is a support, you want to see big number on bid, because buying limit orders show on bid. This is your number, 163. This is it. This is what you want to see to enter along. All right, that's the confirmation. Now, another example, imagine that you found a support, for example, using volume profile somewhere in this area. This is a support, and you are waiting for confirmation in here. Because this is a support, you want to go long, and you are waiting for a big number to appear on bid somewhere in here. This is your number, 172, most likely a big limit buying order. When you see this big number, you enter short. Unusually big volumes traded around the support. Most likely somebody big was waiting there too, the same as you, right? Now in here the price was going upwards. Let's say that you had a resistance somewhere in this area. Maybe you used volume profile or price action to find this resistance, doesn't matter, but you're not sure whether you want to trade from there or no, so you want to see a confirmation. This is 5-minute chart, so the number won't be that great as if you were using a 30-minute chart. Now, this 211 contracts appear in here on ask, which means that this is most likely a selling limit order. All right, somebody big was waiting with a pending order in here, and they entered short, so you also enter short, right? Another example, let's say that there was a support area in here, somewhere in here, and you're waiting for some big number appear on the bid, because if big number appears on bid, that means that there was some buyer waiting until the price reaches his limit order. This is the big number you're waiting for, 160 contracts. When this number appears, you go long. Again, if this number appeared just out of nowhere, like for example in here 1984, then it doesn't need to be a confirmation to go long. You know, it needs to appear within the support zone. Otherwise, it's not too much help, all right? It always needs to appear in support or resistance zone. Now, this is 5-minute chart of the Euro futures. Let's say that somewhere in here was a strong support, and you're waiting for a confirmation in this area. This is the confirmation. Those big numbers, most likely limit orders, buying limit orders. And as soon as they appear, as soon as you're able to tell that those numbers are way above average, then it is a signal that somebody big was also waiting in this area. They have just entered their limit orders, or they are just entering their limit orders. And as soon as you see that, you go long. All right? Those huge numbers or unusually big numbers are on bid, which means they could be buying limit orders. Now, those numbers can actually also be market selling orders, right? So that's a pretty tricky thing, as I explained in one of the first videos. But because they appeared in a support zone, then the chances are that those are limit orders and that those guys are buyers. All right, so next example is Australian dollar futures, 5-minute chart. Let's say that this area was a resistance and you were looking for a confirmation to enter a short. So the price was moving into this area and you want to see a big limit order on the ask side in here. You want to see a big number in here, unusually big number. 147, way bigger than the average. All right, so that's the limit order. That's the number you were waiting for. Big players are jumping in with their limit orders, so you go short. Now, this is the ES 5-minute chart. This is futures for Standard & Poor's Index 500. Now, imagine that this area was a strong support, and you wanted to see some confirmation before you enter a long trade. So, price is going downwards. Suddenly, this huge number appears on the bid. This is a signal that somebody big, some big trading institution, was waiting in here with a pending limit order to buy. And when you see that, you go long, right? Unusually big number created within that support zone. That's what you want to see on the bid side of the market. Now, as you can notice, there are also bigger numbers in here, for example, 520 in this area, but you're not interested in that because you only want to see some big number created around your support. You're not interested in this huge number, at least not with this limit order confirmation strategy. All right, so you want to see the big number, but you want to see it somewhere in here. If it appears in here, it means nothing, at least with this strategy. Now, this example is the futures for the Australian dollar. It's a 5-minute chart. Let's say that you have a resistance zone somewhere in here. You want to see a big number appear on ask side, because that would mean a big selling order. Now, the first big number appears in here, 147, so that would be the first confirmation. Also 106 in here. That's another confirmation. Now, this is 5-minute chart, and all this can happen really fast. So, for example, as the price is advancing upwards, there could be the 147, then a few seconds after that, 106 in here. So both of those can be confirmations. And if you enter a short somewhere from this area, it's all right. It doesn't need to be from here. It can also be from here, all right? As soon as those buyers jump in, as soon as those sellers jump in, those are sellers with limit orders, most likely. So when you see that, you can just press the sell button and go short. Now, another example, this is also the Australian dollar futures 5-minute chart. Let's say that this area is a support, which you found, for example, using volume profile. And from this area, you want to go long, if there is a confirmation, that is, all right? So you want to see a big number appear on the bid side of the footprint, because that means buying limit order. 117, in this case, if you compare it to the rest, it is a big number. So most likely this is a pending buy order of some big trading institution. As soon as you see that, you go long. Now in here, there's a similar scenario. Let's say that this is a support area. You want to go long from there. Price is going downwards. You open up your order flow, 5-minute chart, and you're waiting for a big number to appear at bid. 215 contracts. That's what you were waiting for. That's the signal for you to go long. All right. Now you can also notice 161 contracts on the ask. And what this actually could mean is first a limit order by buyers, a buying limit order in here, and then aggressive buyers jumping in with market orders. Doesn't need to be like that, but in this case, I would say that it probably was like that. Aggressive buyers saw that somebody big entered the market, and then they started to jump in. Now I'll talk about this a little bit more in the next couple of videos, so let's just move forward into the last example. This is also Australian dollar futures, 5-minute chart. Let's say that this is a resistance zone, and in this resistance zone, you want to see the confirmation. You want to go short, so you want to see confirmation on the ask side of the footprint. You want to see a big number, unusually big number on the ask side. This is the number, this is the unusually big number. As soon as this appears, those 160 contracts, you go short, that's your confirmation. This is most likely a selling limit order of somebody big. All right, so that's the confirmation number one, confirmation using a limit order, where we try to identify limit orders, and those help us to see whether there are big players waiting at the same support or resistance zones as we are. And if they start jumping in, then we see their limit orders, and we also participate in that move, which is likely to follow. All right, so that's it for this video. Thanks for watching, and I'll see you in the next one.
Any questions so far? Armin on YouTube asked a question, which was, the support zone counts as the level like weekly value area low, or is it just a whole area, for example? 204, 207. I mean, weekly value area low is not just one level. There's always going to be a zone around it. So for me, when I'm looking at weekly value area low, I generally, on ES, let's say, I have like a 1-point range on each side. So basically a 2-point range that I'm looking at, that's my zone. Unless there's some other kind of support area. But personally, I prefer to look at footprint charts or cluster charts and find zones there for support and resistance. So let me see if I can kind of pull something up really quick to show you guys. I think I deleted like all of my screenshots the other day, but hopefully I can find something really quick. Is this a cluster chart? So here's an example. This is large volume on ES during regular trading hours. So this is the zone here, which it's kind of hard to tell exactly. It looks like it's 88 down to 85. It might be 86 to 88. So like a 2-point range like I was just talking about. And then as price comes to here, I mean, I'm not on the right chart to see the bid and the ask. But when I'm trading, I'm watching both. But in this case right here, right at the zone, 1,100 orders came in, right? And the distinction here is like these larger orders that we're seeing through here are all during the New York session. So all of this here is New York session. And all of this going forward is after hours for, at least for New York. I don't know if it's Asia or London session because I don't even have the times at the bottom. But this is not the New York session. That's why the volume is lower. But during this time frame, if we look, you know, except for down here at the bottom, it looks like 1,800 contracts, but I could be wrong. But that's what it looks like. There's 3,000 here, 1,200 here. Looks like 1,800 here, but then going forward from there, like this was obviously where to get in long was somewhere down here, based on this order flow. But then when we come back up to the top, like this is lower, this is lower, this is lower, and then boom, 1,100 contracts. This is your area to enter short, which obviously I did in this screenshot. I don't know the results of this trade because I have no idea. But I entered short there based on this zone and based on the order flow. Okay. Yeah, somebody already said there's an echo. I have no idea why there's an echo. I don't know what to do about it. So I guess there should only be an echo, I think, when I'm talking, right? It's not when Trader Dale's talking. And I'm sure there's no echo if you go to the YouTube, but I could be wrong. Any other questions, anybody, before I move on? Yeah, I like to use clusters for spotting zones and footprints for confirmation. Yeah, so everybody's saying the echo's in Zoom. I apologize. Yeah, echo when I'm talking. So, and I know it's not going to be in YouTube. So, I mean, you could always go to YouTube and watch and listen and mute me in Zoom or whatever. And that way you can ask questions in Zoom if you want to, but I'm watching both chats, so it doesn't really matter. All right, any questions before I move on here?
Hello?
And for people that are new, like, this is unlocking the matrix when it comes to trading. So if you take the time to learn order flow, and we're breaking it down pretty as easy as possible. If you watch the first class, watch the second class, and then kind of finish the series, I'm not sure how many videos it will, or how many sessions it will take for us to get through all of this. But once you really grasp this, things start to get a lot easier as far as trading's concerned. All right, I guess I'm going to hop into the next one.
To be talking.
Actually, sorry, really quickly. I think I'm going to do 2 more videos after this. So this is probably going to be about a 2 to 2.5 hour long class.
About confirmation number 2, which is confirmation by absorption. You can see that absorption on the order flow software, on the footprints, and I don't really recommend trading it as a standalone strategy, but it is excellent confirmation strategy. So let me first show you what it is all about. Let me draw you a little picture. So imagine there is a resistance zone, which you found, for example, using the volume profile, and imagine that the price is moving towards this resistance zone. Now, it hit the resistance zone and you are waiting for a confirmation. Now, if in this resistance zone, there is high volume node, and in that high volume node, there is big number both on bid and also on ask, then it's the absorption. What happens is that buyers were pushing the price upwards, and they are still pushing the price upwards. They are wanting to move the price higher with market orders. But in this resistance, there are strong sellers who absorb all that buying activity. So they sell to all those buyers who want to buy at this price level. And because of this, the price doesn't shoot higher, but those aggressive buyers get absorbed. And what happens is that the price turns and goes downwards from that resistance. So this is the confirmation, the absorption. You're looking for a high volume node which has big volumes on both sides of the footprint. So heavy volumes on bid as well as heavy volumes on ask. All right. The buying pressure got absorbed and the buyers ran out of fuel and sellers took over in here. All right. So that's the confirmation on the resistance zone. Now, imagine a long trade scenario. Imagine that this is a support zone, which you also find, for example, using volume profile, order flow, or price action. It doesn't really matter. This is the support zone which you want to trade if it is confirmed. The price is moving downwards, hits the support zone, and in that support zone, you want to see the confirmation. Now, there's a high volume node with heavy volumes on bid and also heavy volumes on ask. The sellers who are pushing the price downwards get absorbed. Buyers at this price level are willing to purchase all those contracts, all those volumes the sellers are selling. So the selling pressure gets absorbed, the sellers run out of fuel, and what usually happens is buyers take over, all right? Which means price turns and goes upwards. This is the logic behind this setup. Big guys or big trading institutions absorb all the buying or the selling pressure. Now, how you can tell that they absorbed this pressure is because high volume node in here or in here. A high volume node like this, which got created in a support or resistance zone, that's the absorption. All right, so in this case, it's a little bit easier than the confirmation number 1 using limit orders, because in this case, you don't really need to think where the limit order needs to be, whether it needs to be on bid or on ask. In this case, you want to see huge number pop up in here and also in here, on bid as well as on ask. This is how it can look like. This is buying activity absorbed. So imagine buyers are pushing price upwards. Then there is this high volume node. As you can see, there are huge volumes both on bid and on the ask. And this absorbs all the buying pressure, all the buyers, and from that place, the price goes downwards. All right? Buying activity of those buyers got absorbed mostly in here. Now this is a selling activity absorbed. Price was going downwards in here. Then this high volume node got created. As you can see, there is a huge number both on bid and also on ask. And from that place, buyers took over because the selling activity got absorbed. All right? Sellers ran out of fuel. The buyers just bought it all at this price level, and then they pushed the price upwards.
Limit buyers, market buyers. I didn't hear him mention that. And on this side, it would be market sellers, limit buyers. I'm sorry. Market sellers, limit sellers.
Now, what is a big volume signaling absorption? There are 3 rules to tell you that, to help you identify the heavy volumes signaling absorption. Those rules are the same as from the previous video, the confirmation number 1, the limit order confirmation. So I'm just going to run through it real quick. Rule number 1, the most important rule, the order which you're looking for, the absorption volume node, is bigger than usual order. So if you look at this picture, then the price was going downwards, it got absorbed in here, and then went upwards. And if you look at those numbers, 203 and 493, you can immediately tell that it's way bigger than the average, right? So if you look at those footprints, for example, then those volumes in here are way above the average. This is the most important rule, rule number 1. If you are new to this, just stick to this rule number 1, and you should be fine, all right? But there are also the rules number 2 and 3, which you can follow when you are a little bit more experienced. The rule number 2 says that every instrument has their usual order volume different. So, for example, those volumes that you can see here would be sort of normal volumes for the Euro futures. But if you went, for example, to the ES, Standards and Poor's Index futures, then those numbers would be way higher. So every trading instrument has the usual order volume different, all right? So you need to keep that in mind. It's always best to start with one trading instrument, get feel for it, learn to trade it, and only afterwards start with another one. Now, rule number 3, different time of day or different time of sessions has different average order size. So as you can see in here, those volumes were created at the beginning of the European session. If this was the US session, then this kind of volumes probably wouldn't be as huge as it is when it appears in the European session. All right, so you also need to keep that in mind. Now let's move forward. This is also pretty similar to the info which I showed you in a previous video in the confirmation number 1, this additional info. This is where I look for the absorption. For the absorption confirmation, I look for it on 5-minute chart and also on a 30-minute chart. You need to keep in mind that big order on a 5-minute chart is usually smaller than a usual order on a 30-minute chart. Now, the order doesn't need to appear all at once because of the icebergs. So, for example, in here, this high volume node could be created like there could be 20 on bid, 20 on ask, then another 20 on bid, 20 on asks, and it would continue like that until the bid was 203 and the ask 493. And this could happen within, for example, half an hour or 15 minutes, all right? So this is the iceberg order. Big trading institutions like to trade like this, so their volumes don't appear all at once. And with this, they sort of want to mask their intentions and what they are doing right now. But in the order flow, we can track them pretty easily. So in the end, we will see that there's a huge number and that the market is most likely to turn. Now, again, as in the previous video, you don't need to watch the order flow all the time. You only need to watch it around support and resistance zones. So imagine that this is a support zone. You have some alert, for example, in here. When the price is getting near the support, you get a signal from the alert, you open up the order flow, price goes slower, and in this area, you are waiting for the confirmation. In this area, you are waiting for something like this. All right, so let's now have a look at some examples. I already used this one in the previous slide. The price was going downwards. Imagine that there was a support. The price hit it. Then this high volume node appeared with huge numbers on bid as well as on ask. This looks like the absorption. The sellers were pushing the price downwards and got absorbed by the buyers who wanted to buy in here. So the buyers started buying at this price level, and this is the signal for you to go long. As soon as you see big numbers jumping in around your support level, you press buy button, all right? Now this chart shows the Euro futures, 30-minute chart. imagine that there is a resistance zone somewhere in this area, and in this area you're waiting for a confirmation. So the price is moving upwards, and suddenly you see this high volume node, 369 and 378. This is an absorption. The buying pressure gets absorbed. Sellers won't let the price to go much higher, only a few ticks, and then the price turns and goes into selling activity. So this is the absorption. As soon as you identify that heavy volumes are jumping in, that the sellers are absorbing buyers, you go short, all right? This example is also Euro futures 30-minute chart. In here, it's very nicely visible. Price is pushing upwards. Let's say that there is a resistance zone somewhere in this area, and in this area you are waiting for some sort of confirmation. And this is the kind of confirmation you want to see. Unusually big volumes created in your resistance area, both on bid and ask. This is the absorption. This high volume node indicates that the buyers who are pushing the price upwards get absorbed, and sellers taking over and pushing the price downwards. What's also pretty nice in here in this example are those selling imbalances. So what happened is basically sellers taking over in here, absorbing all the buyers, and then this is the aggressivity of the sellers. Aggressive sellers pushing the price downwards, right? Those imbalances. Another nice confirmation of the level. Now this is also the Euro futures. And if you look at the time, then you can see that this is the peak hour, this is the overlap, where the European session overlaps with the US sessions. So the volumes within this overlap are usually heaviest, at least with the Euro futures. Now let's say that there is a resistance somewhere in here, and you are waiting for a confirmation. The price is pushing aggressively upwards. You can see all those imbalances, all those buyers pushing the price upwards. But in here, clearly, sellers are waiting, wanting to sell. If you look at the volumes, there are pretty massive volumes all over this area. For example, in here, or in here, or in here, those are high volume nodes, and it signals that the sellers are absorbing all the buying pressure from here, and that the price is not really likely to continue in the buying activity. So as you can see, after some time, the sellers absorbed all the buying orders, the buyers ran out of fuel, and the price went downwards. So somewhere in this area would be a good place for a short, after you saw that unusually big volumes, both on bid and on ask, are traded here. When you see that, when you identify that, you can immediately press the short button. All right, now let's have a look at another example. This is 5-minute chart on the 6E, Euro futures. As you can see, the volumes are not as heavy as in the previous case. The reason is mostly because we are on 5-minute chart. The price was going downwards. Then let's say that there is some support in here, and you are waiting for some confirmation within this support zone area. Now, here is a nice example of the absorption, 133 on bid and 152 on ask. If you look in here, then you can see that the 133 and 152 are pretty huge numbers compared to the volumes in footprints which got created before that. So that's how you can tell that this is unusually big number, way above average, and it appeared in here in your support zone. So as soon as you see unusually big numbers to appear in here, you go long. This is the absorption. Heavy volumes on bid as well as on ask. Now in here the volumes are way bigger. This is the ES, futures for Standard & Poor's Index 500. It is a 5-minute chart. Imagine that there is a resistance somewhere in this area, and when the price hits this resistance, you want to see some confirmation. You want to see heavy volumes created both on bid and on ask. You can see that right here, this high volume node, also this high volume node in here. Unusually big numbers if you compare it to the rest of the others in those footprints, right? And the important thing is that those volumes got created in the resistance zone. As soon as you see that, as soon as you identify the absorption, you can enter your short. You can enter it from here, or you can wait a bit and enter from here 5 minutes later. As you can see, this is pretty similar to the previous confirmation strategy, to the limit order strategy, only it's a little bit easier because you don't need to think where the heavy volumes needs to be, because they both need to be on bid and also on ask. So it is a bit easier. Anyways, this is another example, also the same chart, also the ES 5-minute chart. The price is going upwards. Imagine that this is a resistance zone which you created, for example, with a volume profile or with order flow. And in this resistance zone, you are waiting for some confirmation. When you see it, you can enter your short. Now in here, this high volume node, it's a very nice case of absorption. If you compare those volumes to the rest of the volumes in this area, you can tell that those volumes are way above average. So most likely, the buyers who are pushing the price upwards get absorbed in here by the sellers. The sellers absorb all the buying pressure, then push the price downwards. Now there is one more interesting thing to notice. If you look at delta, in here and in here, those are buying footprints, those two. The price is moving upwards, but delta is negative. Usually when the price is moving upwards, the delta should be positive, like in here. You see, price moving upwards, delta is positive. But in here, price is moving upwards, but delta is negative, which is sort of weird. What this means is that price is moving upwards, but sellers are entering their selling positions in the up move. All this stops with this high volume node. As you can see in this footprint, the delta is positive, but very close to zero actually. And then there is the sell-off. The price simply wasn't able to continue upwards. Sellers took over, and the breaking point was this high volume node.
I don't think Trader Dale really emphasized the importance of seeing this negative delta as price is pushing up. This is a huge indication of a reversal. But the key is you need to be patient and wait again for that confirmation that there is a reversal before you try to hop into a trade. So, but this is, when you see this, it's big news.
Simply wasn't able to continue upwards. Sellers took over, and the breaking point was this high volume node. Now another example, this is Euro futures, 5-minute chart. Imagine that there is a support somewhere in this area. Support you created, for example, using volume profile. The price is moving downwards, sellers are pushing the price downwards, and in here the sellers got absorbed and the buyers won't let the price drop lower. They start buying and the sellers are not able to push the price lower because the buyers are buying at this price level, they're holding it, absorbing all the selling pressure, and when the sellers run out of fuel, the price simply turns and goes upwards. All right, so this is the absorption.
And then there's absorption here, if you're paying attention.
Now, those are massive volumes. Massive volumes on the ES. This is the futures for SP500, the ES, 5-minute chart. Strong buying pressure, and in here with those massive volumes, buyers are...
I don't know where he's trading, but 2200, like, if this is 10 o'clock at night in the overnight session, then this is insane. But I don't know where he's trading from. It could even be a different country. But you should not see this kind of volume in the overnight session on ES.
Are absorbed. There is the absorption in this area. Heaviest volume node. The heaviest volumes are created in here. Over 5,000 contracts on bid and also over 5,000 contracts on ask. This is the breaking point. This is where the sellers start to sell, absorbing all the buying pressure. Buyers run out of fuel and sellers take over, reversing the price and pushing it downwards. There were some huge volumes in here. If you compare it to the rest of the footprints, you can tell how massive this action in this area was. This is definitely an important turning point. Now this is actually pretty similar to the previous case. It's the same chart, only in this case, price is going downwards, and in this area, there is the absorption. Buyers start to absorb the selling pressure. Don't let the price move too much lower, only a few ticks in here, and then trend turns and there is a buying activity. All the selling pressure got absorbed in here. As you can see also, over 5,000 contracts on bid, over 5,000 contracts on the ask. This is the breaking point, and from that...
His charts are pretty zoomed in, so this, you know, like the absorption's happening here. And it's 29.3150 basically is like the major zone. It looked like they moved down pretty significantly, but if you look at it, it's only 29.2850. So this is really just 3 points, which is not much on ES.
The trend changes. This is also the ES, also 5-minute chart, but in this case the volumes are not so heavy, so I would say that this was a different trading session. Imagine that there was a strong support somewhere in this area and you wanted to go long from there if there is a confirmation. So the price is moving downwards. There are heavy volumes in here, but they don't really matter because they did not get formed in a support area. So price continues to drop, but in this support area which you want to get confirmed, this high volume node appears. Over 1,000 contracts on bid and over 1,000 contracts on the ask. This is way above average in this trading session. So when you see this, you should be aware that this is unusually big number, both on bid and on ask, and that this is most likely the absorption. So the buyers are absorbing all the selling pressure and eventually turning the price. All right, so as soon as you see huge numbers, to appear in here, you immediately go long. This example is also the ES 5-minute chart. I would say that this is also not in the peak hours because of the volumes. Let's say that there is a resistance somewhere in this area, which you created, for example, using the volume profile. The price goes upwards. Then high volume node appears in here. Heavy volumes, way above average, start to appear both on bid and on ask. And this is the signal you are waiting for. This is the signal to go short. All right? Buying pressure getting absorbed in this area. Now, another example is the ES 500 5-minute chart. If you look at the time, then this is the end of the New York session, and sometimes pretty massive volumes got traded there. It is also this case. So imagine that there was a strong support created, for example, using the volume profile. There was a selling pressure, and you are waiting for some sort of confirmation. In here, there really wasn't any, but in the next 5-minute footprint, in this one, massive volumes started to appear in here, in this area. The heaviest volumes in this high volume node, over 3,000 contracts on bid, and also over 3,000 contracts on the ask. So this is sellers pushing price downwards or trying to push the price downwards, and buyers absorbing the pressure. And when all the pressure gets absorbed somewhere in this area, mostly in this area, then the trend changes and the price goes upwards. All right, this whole area is the absorption. The most important place from this absorption is this high volume node, because the heaviest volumes within this whole area got traded right there in this high volume node. Now this is the Australian dollar futures, 5-minute chart. So the volumes are going to be significantly lower in here. Also the volatility is way lower. So imagine that this was a resistance. In this resistance, in this zone, you want to look for some confirmation to go short. Price is moving upwards. And then this high volume node appears. 133 contracts on bid, 132 on ask. Those volumes are way bigger than the average in all those previous footprints. So this is a sign of absorption. And as soon as you see that formed in that resistance zone area, you go short. Now this is the last example. It is on the 6E, which is Euro futures. It is a 30-minute chart. Price is moving downwards. Imagine that somewhere in here there is a support area. In that support area, you are waiting for some confirmation to enter a long trade. So there is this high volume node, heavy volumes both on bid and also on the ask. Also in here, this is also a pretty significant volume node because there were also pretty massive volumes in here. So as soon as you see this, then this is a sign of absorption because there are heavy volumes both on bid, also heavy volumes on the ask. And from that place, the price turns. This is the breaking point. The sellers ran out of fuel and buyers taking over. All right, all the selling pressure got absorbed. So that's for the absorption setup. It's pretty similar to the limit order setup. I like to use them both. When there is a support or resistance zone and there is either the limit order setup or the absorption setup, I like to use those as a confirmation to enter my trades. All right, so that's for this video. Thanks for watching, and I'll see you in the next one.
So Armin asked, does the buying number have to be higher or low in order for the seller to absorb and send it lower? A bit confused because I saw higher buyers and few, I don't know what that word is, lower sellers, and they still went lower. I think it's bid. Based on what you're saying, I would assume that you didn't watch the first class because, and when I'm saying this, I'm not trying to insult anybody, but if you understand order flow, there's no way to know if the sellers are, or if it's sellers appearing on the bid or buyers appearing on the bid or sellers appearing on the ask or buyers appearing on the ask. They can appear on both sides. And I'll explain it a bit further, but this was all covered in the first class. This is the bid side, and passive buyers show up on the bid side. On the ask side is our passive sellers. So these are our limit orders, right? But all you guys have to do is think about your own, you have to just think about your own orders when you're buying an option contract. Because if you're passively buying with a limit order, you're going to show up on the bid. If you're aggressively selling, you're going to show up on the bid. If you're aggressively buying, you're going to show up on the ask. And basically, so we have aggressive sellers on the bid side or passive buyers on the bid side. So limit buyers, limit orders would show up on the bid side. Market sellers would show up on the bid side. right? So we don't know, are these buyers or sellers? We also don't know on the ask side if they're buyers or sellers, because our limit sellers show up on this side and market buyers show up on the ask side, right? So this encompasses the entire thing. When we're looking at absorption, we don't know if these are buyers or sellers. And where you're probably getting confused is when he was talking about order flow confirmations with limit orders, you were seeing like, instead of seeing absorption, what we're looking at on these videos, we were seeing,
Hello,
sorry,
this
I'm
video is going
pulling
to be about
up the video so I can show you. So like we're seeing limit sellers here, and there's not as many on the bid side, right? So again, we don't know if this is limit sellers or market buyers, right? But when we're looking at confirmation, and we're only seeing like limit orders coming in, or we're seeing mostly limit orders, right? We're hoping that these are limit sellers. If it was easy as buyers and sellers, like buyers are on this side and sellers are on this side, we would never miss a trade. We would never, like, nobody would use anything to enter a trade other than order flow, because all you would have to do is say, oh, buyers here, let me buy. Oh, sellers here, let me sell. Like, it would just be so simple that like you just couldn't mess it up. It's not that easy. Okay. So again, at the very beginning of the video, and I'm not shitting on anybody when I say this, you have to watch part 1. Part 2 is not going to make sense without part 1. Okay. So now on to aggressive orders.
Hello, guys.
This is definitely not something that you can just watch part of this and understand it. This is order flow. I don't want to say it's super complicated, in the sense that I don't want to make it sound like it's difficult to learn, but there is a lot to it. And once you really understand it, it will help you greatly in your trading, but it's not something that you can learn in just, like 1-2 hour video or whatever. So like the first class, I think the video ended up lasting like 2.5 hours. Toby, stop. Hey, stop. Sorry, my dog's acting insane. JC, you're talking about something completely different. You're talking about confirmation on volume profile, not using order flow at all. So you're talking about like breaking through a level, getting 3 5-minute candles, retesting your level, or breaking below a level, 3 5-minute candles, retesting a level. That's not what we're doing right now. That's completely different confirmation. All right. Into the next video.
To be talking about another way of trade confirmation. This time is going to be confirmation using aggressive orders. Again, we will be using the order flow, the bid and the ask setting, and we will be looking for aggressive market orders either on bid side, which would mean aggressive sellers, or on the ask side, which would mean aggressive buyers. So what this is all about. Let's start with scenario number 1, aggressive sellers in a resistance zone. So imagine there is a resistance zone somewhere in here, and in this zone you want to see a confirmation. You want to see a confirmation before you enter your short trade. So price is moving upwards, hits this resistance zone, and in that resistance zone you want to see aggressive sellers. You want to see aggressive sellers entering the market and pushing the price downwards. And aggressive sellers, if you look at footprint, this is one cell of a footprint, so those aggressive sellers will show on bid in here. So you want to see sellers jumping in. So if there is to be a footprint like this, then those numbers on bid should be bigger than numbers on ask. you'll see those sellers jumping in, those numbers growing bigger and bigger, and that's a sign of aggressive sellers. And this means that those aggressive sellers are rejecting higher prices, and most likely they'll push the price downwards, all right? So you want to see big numbers jumping in here. Well, not necessarily big numbers, but bigger than the numbers on ask. And usually this is pretty quick, so you also need to be quick in order to use this trade confirmation, all right? Now, the best way how to identify those aggressive sellers is if they show as imbalances in blue numbers. That's the best way how to identify those aggressive orders using imbalances, but we will get to that. Let's now cover the second scenario, aggressive buyers in the support zone. So imagine a support zone, and imagine you found this support zone, for example, using volume profile or another trading strategy, and in that support zone, you want a confirmation for a long trade. So price is going downwards, hits the support zone, and in that support zone, you want to see footprints that have bigger numbers on the ask. That's buyers. Aggressive buyers are on the ask. So you want to see big numbers jumping in here. Well, not necessarily big numbers, but bigger numbers than numbers which were on bid. This means aggressive buyers joining in. This will also be pretty fast. Usually it is pretty fast. And what you can expect is price moving away from the support, making a reaction. So as soon as you identify those aggressive buyers, you enter your trade. Now, if you don't manage it, if the price just runs away without you being able to enter, you can always wait for a pullback to this aggressive zone. If there is aggressive zone with buying and balances, blue numbers, then those could work as a support. And from that pullback, there could be a second buying reaction. All right, so even if you don't catch it the first time, there still may be a chance that you'll be able to jump in and participate in that movement. Now, this is how it looks like. In the first scenario, aggressive sellers. So imagine, in this example, the price was going upwards, and imagine that there was somewhere in here, there was a resistance where you wanted to go short from. This is the resistance. Now, not much happening in here in this footprint, but the next footprint starts to form, and you see those imbalances, selling imbalances, those blue numbers. If you don't know what imbalance is, I was talking about it in some of the previous videos, so you want to check it out. Imbalance created on bid means aggressive sellers. Sellers way more aggressive than buyers. So those imbalances on bid start to jump in, sellers start to jump in, and this means that most likely there'll be selling activity. All right, so that's the confirmation you want to see on your resistance zone. What you can also notice is the delta. I'll be talking about delta a little bit more, but in here you can see that it's positive and it's turned into negative. I'll talk about this more in the next slide, so let's just move to the next example, to the aggressive buyers. There was a selling activity in here, and then imagine that you had a support somewhere in this area. Imagine you created this support using a volume profile, for example, and in that support you are waiting for a confirmation. This is the confirmation of aggressive orders. This one, imbalances on the ask side of the footprint. Also this imbalance, and it doesn't need to be imbalance. You want to see big numbers jumping in the ask side. So also this, bigger numbers than on the bid side. 59 bigger than 49. So you can clearly see that in this footprint, buyers are stronger than sellers. Also delta tells you that. Delta in this footprint is 328, and in this footprint, only 63. All right, so from that, you can predict that the price will turn and it will go upwards because aggressive buyers started to jump in the market. Now, let's talk a bit about delta. If I had to put it very simply in just one sentence, then delta is the difference between buyers and sellers. Now, this is not entirely true, but if you remember this definition, you should be fine. And the delta is calculated using volumes traded on bid versus volumes traded on ask. So if you look, for example, at this footprint, then the sum of all those numbers minus sum of all those numbers is minus 41. This means that there are more aggressive sellers than aggressive buyers. You can see the delta below each footprint. If it's green, it's positive. If it's red, it's a negative. You can also see delta in the summary in here, those numbers. As you can see, they match. All right, so this is where you can read delta. So for example, delta just for this one cell would be minus 13 because it would be 3 on bid minus 16. So delta would be minus 13, negative delta, but only for this cell, all right? But delta is always calculated for the whole footprint. So all those numbers, sum of those numbers minus sum of those numbers. In this case, there are more volumes traded on the ask, which is in here, which indicates more aggressive buyers and slightly positive delta. Now, there's one tricky thing with delta. If it wasn't, then delta would be the holy grail. It would be the absolutely best indicator on the whole world, and there would be nothing better. Unfortunately, it is not like that. Delta is not a holy grail. There is one problem with delta. Not many people know that, not many people mention that, but if you remember one of the first videos which I made and which I hope you watched in this video course, if somebody enters a trade with a limit order, if somebody enters a long trade with a limit order, it will show in here on bid. And if you enter a short trade using a limit order, it will show in here. So it's exactly the opposite as if you are using market orders. And this single thing messes the delta up. All right, so that's the reason why delta isn't the holy grail. Because if people are using limit orders, then the information delta is giving you is very distorted. But it's not usually like that. People like to use market orders. People use market orders, especially aggressive traders. When they need to enter a position, then they need to enter with the market orders. So delta helps. Delta is very useful to watch, but you also need to remember that it's not a holy grail, all right? Because of the limit orders. Now, I just explained it very briefly, so if you didn't understand what I meant by that, I think best would be to rewatch one of the first videos where I talked about the footprint and how it's calculated more in detail. All right, so anyways, this is how delta works. It's tightly connected with aggressive orders, and that's why I needed to mention it in this video. All right, it's tightly connected with this confirmation strategy. Now, this is how the strategy works. The aggressive orders confirmation strategy. You wait for the price to reach strong support or resistance zone. So imagine there is a resistance zone somewhere in here, and in that zone, which you created, for example, using volume profile, you're looking for signal to sell. You're looking for aggressive sellers. So the confirmation could be aggressive orders start to appear. In here, those imbalances, those are aggressive selling orders. When they start to appear, it's time to go short. Usually what you'll also see is change in delta. So if you look at those delta numbers before the rejection of higher prices, they are positive. This means buyers were more aggressive than the sellers. It's usually like that when price goes upwards, delta is positive. But then those aggressive sellers started to jump in, and suddenly delta turned to negative. And there was a sell-off. As you can see, delta is still negative. All right, so aggressive orders start to appear. In this case, those are aggressive sellers. They are entering with market sell orders. Delta changes, and this gives you nice confirmation that there's probably going to be a change in the trend. Now, the best confirmation you can get is if you see a big limit order or an absorption confirmation, and that is followed by aggressive orders. So if you remember, limit order and absorption, those were also confirmations which I mentioned in the previous videos. That's the confirmation number 1. Absorption is confirmation number 2. So if you see any of those, and then aggressive orders start to appear, so in this case, this would be the limit order. The 174 contracts looks like a selling limit order, and afterwards, aggressive orders, aggressive selling orders start to appear. Those selling imbalances. Right, so this is the confirmation setup number 1. And those imbalances, those aggressive selling orders, is setup number 3. Combination of those two, or of course combination of number 2 setup and setup number 3. This is the best confirmation you can get, at least in my experience. All right, this tells you that somebody big was waiting at your resistance. They entered with a limit order, or they absorbed the buying pressure. And then other market participants like you started to jump in because they saw the big player enter the market and they predicted that there will be a selling activity soon. So they start jumping in quick, those guys. That's why you also need to be quick, all right? They start to jump in, you also jump in, and you go short. Now, because you need to be fast, you also need to use fast time frame with this type of confirmation. I prefer to use 5-minute time frame, which means 5-minute footprints, or even faster, all right? You need to be fast. Now, there's also one more way how you can use the aggressive orders, and you can use them as sort of warning. So imagine you have a resistance somewhere in here, and you want to go short from there. The price reaches this resistance zone, and you want to see some confirmation there. But instead, you only see buying imbalances. aggressive buying orders. And this tells you that buyers are dominating the market. You can also tell if you look at delta. This is a really positive delta in here. So buyers aggressively start to jump in, they start to push the price upwards, and this is your resistance. In this case, it would be best not to enter your trade because of those aggressive buyers jumping in. You don't want to see that when price hits your resistance. All right? There's high risk that those aggressive buyers will just push through and you'll take a stop loss. All right, so those aggressive orders can also give you a nice warning not to enter a trade. So if there are aggressive orders going against your trading level, then don't trade that level if it doesn't get confirmed. And even if it does get confirmed, be careful. All right, so that's another way how you can use the aggressive orders. Now, let's have a look at some examples to make it more clear. I've already shown you this example. Price going upwards. Imagine that there was a resistance zone somewhere in here. You want to go short from there, and you see aggressive sellers jumping in. Here, those imbalances, also those numbers, delta turns negative from positive. It was 296, then minus 285. That's a big change in delta. All right, so aggressive sellers taking over, pushing the price downwards. Now, in this example, imagine that there was support somewhere in this area, and you wanted to see some kind of confirmation. Price was going towards your support, and in here you want to see the confirmation. The first thing to notice is this positive delta, even though the price goes downwards. This is pretty weird, and it indicates that even though the price goes downwards, buyers are entering their longs. Important thing to notice. Next important thing to notice, buyers start to jump in those imbalances, and also positive delta. Way more positive than it was before, actually. So positive delta, and also this is the nice confluence of two confirmations. This is the absorption, the confirmation setup number 2. Sellers get absorbed in here. Aggressive buyers start to jump in. As soon as you see that, you go long. This was pretty nice and clear signal. You only need to know what to look for. Now in here, there was also this weird thing with the delta. Price was going downwards. Imagine that there was a support somewhere in here. For example, support which you found with a volume profile. The price hits this support zone, and you look at the footprint, 5-minute footprint, and what you see is price going downwards in this footprint. But delta is positive, which is weird because the price is going downwards, but there are more aggressive buyers. So this is first thing you should notice. Then you should notice this 146, 108, 122. That's aggressive buyers jumping in. Aggressive buyers with market orders jumping in. This is signal for you to go long. As you can see, positive delta all the way. All right, so let's have a look at another example. Euro futures, 5-minute chart. Price was going upwards. And the first thing to notice, negative delta or delta close to 0, even though the price is going upwards. Let's say that there is a strong resistance somewhere in here, resistance which you want to trade if there is a confirmation. And what happens when price reaches this resistance is this. This is the confirmation number 1. Most likely, big buying limit order in here. And then aggressive sellers start to jump in. Those sellers, those sellers, those sellers. So this is limit order, selling limit order, and those are aggressive selling orders. Then it continues in here. There's imbalance. Aggressive sellers start to jump in. Then also here, those selling imbalances. But by the time you should already be in a short. Ideal place actually would be to enter just after this confirmation, the confirmation number 1. But then also you'll see those jump in real quick. So as soon as you identify them, you go short, all right? Nice combination of the first confirmation setup and this confirmation setup, the third confirmation setup. Now this is actually the same chart as the previous one, only a couple of minutes later. This was the rejection I showed you. And this high volume node in here is a resistance. It is not the strongest resistance, but the price could react to it. Price react to high volume nodes. So let's say that this area is a resistance somewhere around this high volume node, and you want to see some confirmation there. So price is going towards it. The first thing to notice is even though the price rises, delta is negative. Sellers entering their selling positions. There are more aggressive sellers than aggressive buyers. Nice imbalance in here confirms the aggressive sellers are there and they just started to jump in. All right, so this selling imbalance combined with negative delta and of course this resistance zone, that's the signal you want to see to enter a short. All right. As you see, as the price goes downwards, all those candles have negative delta. More aggressive sellers than aggressive buyers. Sellers dominate the markets in here. So in here, imagine that there was support somewhere in here, price was going downwards, and in this support area, you wanted to see some confirmation. At the first confirmation, this high volume node. This is absorption, the confirmation setup number 2. Now after that, buyers start to jump in, aggressive buyers. There's buying imbalance. Also in here, when you see that, you enter long. All right, so you have the absorption in here, and also those buyers start to jump in, aggressive buyers. So that's also the setup number 3, the aggressive orders setup. Now in here, you can notice how it looked like when the price reversed in this resistance area, and the price went upwards. Then this looks like a limit order, selling limit order. That's why it shows on the ask, because it's a limit order. Or I shouldn't say it is a limit order, but I think it was a limit order. All right, so those 153 contracts, and after that, 157 on bid. So this looks like a limit order to sell, and this was most likely a market order to sell. This one shows on ask, that's why I think it's limit order, and this one shows on bid, that's why I think it's market order. But I think that both tell you the same thing. Big guys are going short. Those guys were passive, they were waiting until the price reached their limit order. Those guys joined in as soon as they saw this. So sellers, aggressive sellers started to jump in. Those guys, aggressive sellers jumping in. Slightly negative delta, then the delta is more negative, those sellers in here, aggressive sellers, and there's a pullback, but still with massively negative delta, which means sellers are dominating the markets, and then the sell-off. All right, so let's have a look at another example. In this example, I wanted to show you those aggressive buyers, those buying imbalances in here, also in here. If you have a resistance, and you see those guys going against you, the resistance could also be in here. It doesn't matter if you see this going against you, aggressive buyers jumping in with buying imbalances. You don't want to go short, no short. It's better to wait for the price to shoot past your resistance and then maybe enter a long from this area, because this is a support. Those buying imbalances create a support. All right, so be really careful if you see aggressive buyers or aggressive sellers going against your position, against your support or resistance. It's always best to avoid trading such a trade. Now, as I was preparing this presentation, I saw this on the ES, crazy load of aggressive sellers in here. All those are aggressive sellers selling imbalances. This is a sign of aggressive sellers, and when you see this, you definitely don't want to go long. It's a sign that the price will go downwards. So let me show you what happened afterwards, all right? How the market reacted to those selling imbalances, to those aggressive selling orders. I have that on the next slide. It's a little bit zoomed in. Those are the imbalances. That was a little pullback, and then a sell-off with negative delta. All right, those aggressive sellers push the price downwards real aggressively. By the way, currently there is a massive sell-off on the ES, and I bet those guys are making money on it. Anyways, let's have a look at another example. This is a short level which I had yesterday, or actually today, but early in the morning, so I wasn't trading it, but this is what the footprint looks like. Aggressive buyers. There were aggressive buyers in here, right before the price hit this resistance. A lot of buying imbalances telling me that buyers dominate the market, they are more aggressive than the sellers, and it's definitely not a good idea to enter a short, even though I had a resistance there, I wanted to go short from there, but there were those buying imbalances, and even if I was awake and at the computer, I would not enter a short from there because of those imbalances. Now let me show you another picture. This is the same level. The price went above the level and then hit it again, but this time, sellers took over, selling imbalances. So this would be a nice chance to jump in and participate in this selling activity. Now again, I wasn't awake at the time, it was early in the morning, but this would be the signal to enter the short. All right, those aggressive sellers showing up. Now let's have a look at another example. This is Australian dollar futures, also 5-minute chart. All those examples I'm showing you are actually on 5-minute chart. Price was going upwards. Delta was positive, as you can see in here, which is normal when the price goes upwards. Imagine that there was a resistance somewhere in this area and you wanted to see a confirmation. First thing to notice, absorption, confirmation setup number 2. What happens next? In this footprint, aggressive sellers. And sellers start to jump in. There are 2 selling imbalances, 108 contracts in here, 38 contracts in here. Delta turns negative. And this is the signal for you to go short. As you can see, this is where the sell-off started, this footprint. This is where the sellers really started to dominate the market, where the aggressive sellers started to jump in aggressively. Selling imbalance in here, huge number in here. Also imbalance in here, selling imbalance in here. Another huge number on bid. So that's aggressive sellers dominating the market and pushing the price aggressively downwards. All right, this is how rejection of higher prices should look on the order flow. Absorption or a limit order, and then aggressive sellers start to jump in. Everybody wants to join the party, right? Now let's have a look at this example. This is also Australian dollar futures. Imagine that there is a resistance somewhere in this area, so you want to see that confirmed. Now there's not really any limit order confirmation or absorption confirmation, but there are aggressive sellers in here. Aggressive sellers start to jump in. There are 3 selling imbalances. Delta turns negative. This is the signal to go short. Now, if this happens just like that, not in a resistance zone, then it would be nothing. It wouldn't be any sort of confirmation. It wouldn't be any sort of signal. You always want to look for it in a resistance or in a support zone, all right? I don't really recommend trading it as a standalone setup. Now, this is also a nice case of the 2 confirmations used together. The price is going upwards. Imagine that there is a resistance in this zone, somewhere in this area, and you want to see a confirmation. Now, this is what happened. Aggressive sellers pushing the price upwards are buying imbalances, but there's absorption. That's the confirmation setup number 2, all right, the absorption setup. And sellers start to absorb all the buying pressure. They won't let the price go any higher. Then sellers start to jump in here, 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 all those imbalances, showing aggressive sellers jumping in. Delta turns negative, the trend breaks, and downwards we go. All right, so we have absorption setup number 2, and aggressive sellers started to jump in here. That's the confirmation setup number 3. I really like combinations of confirmations, like in this case. So this is the last example. Euro futures, again, 5-minute chart. Price is going upwards, buying imbalances, so you should be careful. But there is an absorption, and sellers start to join the party. This is what turned the price. First, the absorption, then the aggressive sellers started to jump in. They wanted to participate in the selling activity, which they think will follow. All right, so this is the reaction. It started in here. Those guys help to move the price downwards. Aggressive sellers. It's always the aggressive sellers or aggressive buyers who move the markets, the prices. All right, so that's for this video, guys. I hope you like it. I hope you found it useful, and I'll see you in the next one. Hello.
All right, so while Trader Dale was going over that, I went looking for some examples to show you guys, some live examples from my own screenshots. So like here, for example, can I zoom? Yes, good. If there was, so actually right here, this would be a sell side imbalance right there. You have a sell side imbalance up here as well, these red lines, right? But as price is pushing up to there, we see aggressive buyers come in. So these are market buyers that created an imbalance there. So when you see this happen, you don't want to grab this short, right? So these should scare you. And basically, he talked about this, but I don't know that he talked about it as in depth as I would talk about it. You know, he mentioned like, oh, like if you see an imbalance created, you know, like right below like a resistance level, then you wouldn't want to get in short here. I will never, if I see something like this, I'm never getting in short here. There's just not enough meat on the bone, because most likely, even if they do reject here and sell back down, as soon as they come here, they're going to bounce and go higher. So actually, if anything, you would want them to sell here. Like if you didn't get into this trade here, you would want sellers to show up and bring it back to here to give you a retest for you to hop in long, or even have sellers hop in here, bring it back down to here so you can hop in long, right? You're not looking for I mean, here it's like 3 points basically. Here, it's like 9 points, but still, you don't want to be a seller when you have this strong buying imbalance right below. So you want somebody else to be the aggressive sellers, bringing it down to here so you can hop in long with these guys. Okay. He didn't talk about this at all. He might talk about it somewhere else, but I think this is important to mention, like very important to mention. When you see like 2, 3, 4, or 5 zeros in a row, and so this is all aggressive selling, right? Market selling, market selling, market selling. There is nobody on the bid side. So there's no limit sellers or buyers at all showing up here, or market buyers. It's all aggressive selling. And from here, they dump. I don't know how far down they went, but whenever you see this, if you're quick enough, if you can slap sell, you're going to get a good move. Like you see 4 zeros in a row on ES, you're probably going to get like a good 50-point move to the downside, if not more. We have the same thing show up here again. I don't know how low they went, but this again was aggressive sellers showing up. If you see the same thing at the bottom, you see 4 zeros in a row, or 3 zeros in a row, you can slap buy, and you're going to get, you know, a good, whatever, 30 to 50 point move to the upside. Okay. And then this is one last like extreme example I want to show. So massive sell side imbalance created here, right? So many zeros in a row, and they absolutely dumped it after this. If if you're quick somewhere in here and you click sell, you're going to get a massive move to the downside. And then after this, I mean, like you can't even see the candles afterwards. It went so low. They just sliced through imbalances here. At least 3 of them, right? And here they even created an imbalance. Yeah, so just some examples. So this will be the last video. And if you guys have questions, let me know. I'm not sure how long this one is.
Hello?
16 minutes.
This video is going to be about confirmation number 4, using the cumulative delta. Now, I was talking about delta in the previous video, but this one is going to be a bit different. So let me do a brief recap, all right? So you can catch up if you forgot. So delta is difference between buyers and sellers. This is a short definition of delta. It's not 100% correct, but if you remember this one, you should be fine. Now, this is how delta is calculated. Ask minus bid. And if you look at the order flow software, then it always gets calculated for every given footprint. So in this case, it would be all those numbers, sum of all those volumes traded on the ask, minus all those numbers, the sum of those numbers, sum of those volumes, which were traded on bid. This gives you delta. In this case, it was 22, which means delta was positive, which means that the volumes traded on ask were bigger than the volumes traded on bid. Simply put, buyers were more aggressive than sellers. You can see the delta below each footprint, also in here in the summary. Now, what you can also see in the summary is cumulative delta. And the cumulative delta is sum of all deltas since the beginning of the day. So this is the beginning of the day in here. So the delta of this footprint is 22. So the cumulative delta is also 22. Now, the delta from this footprint is 3, and the cumulative delta is 22 plus 3, which is 25, and so on. It continues like that. All right? This is how cumulative delta gets calculated. But this video is not going to be about order flow, but it's going to be about separate indicator, which I developed. It is also called cumulative delta, but it's a bit different. It looks like this. It uses line chart, and I prefer to use it on a really fast time frame, so 1 minute is ideal. Now, this basically shows you the same thing as the cumulative delta on the order flow. So essentially, it's drawn using those numbers, those cumulative delta numbers. But if you use the 1 minute setting, which is the default setting for this indicator, the default setting which I personally use, then the cumulative delta gets updated every minute. So the changes in delta, the changes between aggressivity of buyers and sellers are way easier to track because it's fast. You don't need to wait for another footprint to show you how the delta changed, but you see it immediately on this line delta, all right? So it's easier to track the changes and most importantly, the divergences because it is fast. 1 minute chart, all right? So that's why instead of the cumulative delta on the order flow, I prefer to use this delta. It is just a visual thing, but in real trading, there is a huge difference between this and this. Now this is how it looks in my chart. I use it as a separate indicator, which I open with a simple price chart. And I use 1 minute price chart, so there is 1 minute on the price chart and also 1 minute on the delta. And what I like to use is a line on close chart for the price. Not candles this time, but simple line chart like you see in here. All right, so this is the 1 minute window where I track the changes in delta. And I always compare the cumulative delta to the price. This is basically how my trading strategy with cumulative delta works. The strategy is super simple. What you do is you look for divergence between price and cumulative delta, preferably in support or in resistance zone. So I use it as a confirmation. I prefer to use it as a confirmation, but you can also use it as a standalone strategy, all right? To catch highs or lows of swing points, you can use it for that. What I personally prefer is, for example, use volume profile to find strong support or resistance levels, and around those levels, I switch to this cumulative delta, and I want to see a divergence between price and the cumulative delta. What divergence is basically this. The price goes one way, like in here, the price goes downwards, but cumulative delta rises. This means that price is going downwards, but there are more and more aggressive buyers entering the market. So buyers are entering their long positions, but the price still continues going downwards. You won't see that very often, but you will very likely see that around support and resistance levels. And when you see that, the price will usually reverse. In other words, react to the support or resistance zone. So imagine in this case that you had a support somewhere in this area of the price chart, and you wait for some confirmation to enter along from that support. Price is going downwards into the support area, and delta is rising. Buyers are entering their positions while still the price is going downwards. This is the confirmation. This tells you that buyers are entering their longs in this support area, that it's probably going to work, so you enter long. It's that simple. The only thing you need is divergence between price and delta. Price going one way, cumulative delta going the other way. And that's it. It's that simple. Just make sure that you use the same time frame on your price chart as well as on delta, preferably 1 minute time frame. Now, when I was preparing this video, I actually saw very nice divergence on the euro, so I took a picture. The price went upwards, delta went downwards. In other words, there were sellers entering their positions while the price still went upwards. So I took a picture for you, and this is the result. This is the same picture, only half an hour later. This is how the price reacted. This is the initial divergence, price going upwards, delta downwards, and this is where the price broke and went into a sell-off. Now, as I said, you can use it as a confirmation around your support or resistance levels, or you can use it simply on its own, or maybe with some other trading indicators or strategies which you trade. It is super simple and it's working very nicely. So let's now have a look at some more examples of this. In here, the price was going downwards, delta was going upwards. Now, you don't really need to pay much attention to the color of the delta, whether it's red or green, because it doesn't really give you any information. Only thing you need to pay attention to is which way it is heading, right? It only shows green when it's above zero, when the delta, the cumulative delta for the whole day is positive, and it shows in red when the cumulative delta for that given day is in negative numbers. But I don't really think that this information is useful, at least not for me. I only look for the divergences. All right, so let's have a look at another example. The price is heading downwards, and you always want to look for the swing points in here and in here. That's how you can tell there is the divergence, all right? So something like this makes it easier to watch those swing points, higher highs, lower highs. But usually it's pretty simple. You can just tell by looking at the chart whether it's going downwards or upwards, right? So there's nothing special about it. Another example, price is going downwards, delta is going upwards. In here, the price reverses and goes upwards. For example, in here, there was a support, and you saw the divergence between the price and delta this would be a nice confirmation of the support, so you would enter it, all right? This is how the price reacted. The price has the overall tendency to follow the delta. So if the price is going downwards and delta upwards, the chances are that the price will turn and follow the delta, right? Because when the price is going downwards and buyers are entering their positions, this can't last too long, you know? This can't last long. The price needs to reverse because people are buying. And when people are buying, the price needs to rise. So the price needs to make a connection to match with the delta. So imagine you had a support somewhere in here. You found that support using price action or volume profile strategy, and you are waiting for some confirmation in here. Price is heading downwards, but suddenly from this point, delta starts to rise. From this point. So, somewhere in this area where you identify that the delta is rising, you go long. Right? After you are certain that there is a divergence between the price and the delta, you can enter your position, preferably if you have a trading level there. Now let's have a look at another example. Price is rising, but delta is falling. So even though the price is going upwards, there are more aggressive sellers entering their positions in this area. So the price is likely to turn to follow the delta, to follow the sellers who are currently selling, right? And here, this is the reaction. Now, another nice example. Imagine that you have a resistance somewhere in this area, and you want to see a confirmation. The price is going upwards towards your resistance, but you notice that the delta is going downwards. Sellers are entering their positions, even though the price is going upwards. So the price will most likely follow the delta, follow the sellers, so there's likely going to be a sell-off, like in here, right? This was the sell-off. Another nice example, price was going downwards, but from this place, there was the divergence because the delta started to rise. Buyers started to enter their positions, even though the price was going downwards. Then there was some rotation, but in the end, the price turned and followed the buyers on delta. If you had a support somewhere in here, then it would be nice confirmation to enter a long. Another example, the price was going upwards, but from this place, the price continued upwards, but delta, the cumulative delta started to go downwards. Sellers started to jump in their selling positions. So even though the price was rising, sellers were jumping in their selling positions, and afterwards they turned the price, which went into a sell-off. Again, all this started with divergence between price and delta. Another example, price is going upwards in a price channel, but delta is going downwards. Sellers are entering their positions in here, also in here actually, so this is the reaction. Then the price rises again and delta goes downwards again, so my bet would be that the price will reverse and go downwards again to follow the falling delta. Now this is the last example. Everything's pretty similar, right? Price is going upwards. Imagine that there was a resistance somewhere in this area. Delta is going downwards. So sellers are entering their positions while the price rises. This is kind of weird, and eventually the price reacts and follows delta. As you can see, this is pretty cool because a lot of indicators are lagging behind the price, but when you are trading delta divergences, delta is actually sort of ahead of the price. So that's why I like to use the cumulative delta, especially this line delta on 1 minute chart, which is pretty quick and very easy to read, especially if you put it like this below the price. So comparing price and delta is super simple and it gives great results. All right, so that's for this video. Thanks for watching, and I'll see you in the next one.
All right, everybody. So that's going to be it. If you have questions, now would be the time. I know a lot of people are watching on YouTube, so you guys have a little bit of a delay. So I'll just keep talking until the video catches up. But basically, where we're at, this is what we're going through. We watched part 3 in class 1. Part 4 we just watched in class 2. Next is order flow, take profit, and stop loss. These videos are pretty short, so this should not take long. I'm guessing these videos are like 5 minutes a piece based on the size of the video. After that would be the live examples, again, shorter videos. So we should be able to bust through both of these chapters in one session. I don't know why he has getting started in volume profile here, but I mean, we can watch these as well. This is also shorter videos. And then the last one is volume profile, how to find strong support and resistance. Again, short videos, but I think what I'll probably end up doing is splitting this up into a class where we do part 5 and 6, and then a fourth class where we do part 7 and 8. Okay. You
Hey,
guys are
Rocket.
still, yeah.
So I joined pretty late. Sorry, I just got off work. So everything that, it's talking about Delta and everything,
Mm-hmm.
the template that you provide on Quant Tower, named, the Drew one,
Mm-hmm.
that's pretty much all set with what he's talking about, right?
Yeah, the only thing is the last section that he did is talking about cumulative delta. It does have cumulative delta, but you're not able to see it on a line chart like he was showing.
Mm-hmm.
The Quant Tower does not have that option, so there's no way
Okay.
to do that. But you can switch to a 1 minute time frame, and you can watch the cumulative delta, on the chart itself, but you're not going to see it. Or I'm saying you can look at the numbers and see the changes, but you're not going to see it on a line chart like he's showing. The only way you'll be able to do that is by going to Trader Dale's website and getting the order flow software.
Mm-hmm. Okay, right on. Thank you.
Yeah. And actually, if you are interested in that, just so you know, there is a special on Shorty's Discord.
Oh, okay, cool. It is
Just
pretty interesting watching it on just a 5 minute time frame on Quan Tower.
mm-hmm.
I've been it's super helpful actually to do that, intraday and see all the numbers piling up and see the divergence happening in real time. So
Yeah.
that's been helping a lot.
So this is what you'll see like on Quantower. I don't have all of these cells. I mean, you can open all of these cells, but the one that he's talking about is the cumulative delta right here, where you can see like lower number, higher, lower, higher, 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 and then going to negative, right? So you can watch it there, but you're not going to see it on a line chart like what he was talking about. Again, unless you get his software from him, but it's not cheap. I don't know. I was trying to find it,
Mhm.
but I think it's here. So yeah, this is his order flow pack right here.
Oh,
$397.
wow.
Yeah. If you were to buy everything, $697. I have it. I don't use it. I don't remember. I think I paid $200 for all of it, and it was so cheap. I just bought it, and I've never used it because I don't use NinjaTrader. But I bought it just in case I ever do want to use it. Then I have it, and I'm not paying $800 or whatever it was. It was such a good deal. I just bought it.
Yeah, that is a great deal, 200.
Yeah, yeah, yeah. But I've literally never used it. So, yeah.
Right on. Thank you.
Yep. Any other questions, anybody? I'm going to wait for just a minute. It doesn't look like anybody has any questions. I think it's pretty straightforward what we've covered. Especially with me like chiming in on stuff where I feel like Trader Dale isn't quite descriptive enough. So I added my little input to what he's saying. But between class 1 and 2, this all should be pretty clear. Again, I don't want to say it's easy, but it's also not insanely complicated. So hopefully there isn't too many questions. And so far,
I
it doesn't look
remember
like there's any.
I remember a couple days ago, during regular trading hours, I was kind of in Discord, or everyone was in Shorty's Discord, and Burnside was um, kind of going over like what was going on in order flow. We're all watching it,
Mm-hmm.
and it was pretty cool. Like when you get in the zone and you really pay attention to the small details and the reactions off each levels, and you see the like the imbalances. You see like the gold numbers and the green numbers pop up at certain levels, and
Yep.
he was saying like it's pretty simple. The info's right there,
Mm-hmm.
but it is easy to also complicate it too.
Exactly. Yep. Any questions, anyone, before I call it? Doesn't look like it. Well, as always, my DMs are always open, or you can always at me in any of the Discords, and I'll get to you and answer your questions if you guys do have any. Um, I will try to do class 3, as soon as possible. Again, the difficulty is I don't have a lot of weekends off, but when I do, I try to always get a class in for you guys. And we've got a lot going on today, or I have a lot going on today. I completely formatted the streaming PC because I don't know, it would be a lot to explain, but I was just having some funkiness going on. And so I figured the best bet was just to do a clean start on that. So I've been setting that PC up, getting it ready to, stream for this week. And then wanted to get this class done for you guys. And then we're going to be going live and going over what we're watching for tomorrow. I'm going to try to see if I can find some option setups for tomorrow as well. And then Shorty's going to be live at 9 Eastern with a market update. So pretty busy day for me. And I also plan on trading live tomorrow. So hopefully I see you guys there. Anyway, hopefully the class was informative. Hopefully you guys enjoyed it. I'm going to be ending the YouTube stream here in just a second, and then I'm going to be ending the Zoom call. So anyway, as always, much love, much respect to everybody. I hope you guys enjoyed the class. I hope it was helpful. And we will see you next time.